Question number 2 from resource pack. Topic is joint venture, Greaves and Hurst. First requirement is explain 2 benefits to Greaves and Hurst of forming a joint venture. These are some benefits. First one is separate from own business. It means that from the joint venture they can generate some extra income. Also they can enter into the new markets. For example, if they are working in the clothing market, the clothing business, they can enter into some other industry, for example in the technology, with the help of joint venture. Then identify share of profit for each. It is easy to identify each venture's profit in case of joint venture to avoid disputes. Share responsibility. Responsibility will be shared among all the ventures. In case of sole trader, you are solely responsible for all the things. And last thing is flexibility. In joint venture, you are not required to give the full time to the business. You can arrange the times accordingly, how many ventures are there in a venture. This is the flexibility and some advantages of forming a joint venture. Next part is to calculate the share of profit made by Greaves and Hurst from the joint venture. In this part, we are required to prepare the memorandum account and to find the profit. Memorandum account is like income statement. All the income and expenses will be transferred in the memorandum account and we will find the profit. The only income is Greaves sold all the goods for 35,000. Rest of them are expenses. Greaves provided goods valued 15,000 and incurred cost of 900. Hurst provided goods valued 10,000 and incurred cost of 800. And the last expenses, it was agreed that the commission of 10% of the sales value would be paid to the person making the sale. For that person it will be income, but for the business it is an expense. So it will be recorded in the expenses. Sales were 35,000. Cost of sales, Greaves and Hurst, 15 plus 10, 25,000. The gross profit is 10,000. Expenses were 900 plus 800, total 1,700. Commission was 10% of 35,000, means 3,500. Gross profit minus expenses, net profit for the business is 4,800. Greaves and Hurst profit sharing ratio was 2:1, means 2 plus 1 is equal to 3. Greaves share was 2/3 and Hurst share was 1/3. So the Greaves share is 3,200 and Hurst share will be 1/3 of 4,800 is equal to 1,600. This will be transferred to their accounts. Next requirement. Additional information. A separate set of books of account are maintained to record the transactions of the joint venture. Greaves and Hurst kept their own transactions with the joint venture in their own books. We have 2 different accounting treatments for the joint venture. One is separate set of books of account are maintained for the joint venture, and the other one is they record the transactions in their own books. In this question, examiner is giving information about both these treatments, but finally he is asking about they record their transactions with the joint venture in their own books. So all the expenses and income incurred with both ventures will be recorded in their own T accounts. The first T account is of Greaves and the second one is of Hurst. Greaves has made all the sales. Sales will always be on the credit side and expenses and his share of profit will be on debit side. Greaves paid for the goods 15,000, expenses 900. Commission was 3,500. Why this commission is on the debit side? Because it was expense for the business. If it would be income, then it will be on the credit side. But in this case, it was expense, so it is on the debit side. And the profit share of Greaves was 3,200. The total amount owed to Greaves by the business is 15,000 plus 900 plus 3,500 plus 3,200. But he has received 35,000. He has received more than the amount owed to him, so the remaining 12,400, which is the balancing figure, will be payable to Hurst, and this is the balance brought on credit side. Credit side means this is a liability of Greaves. In the Hurst account, he has paid 10,000 for the goods, 800 for the expenses, and his share of profit was 1,600, which we calculated in the previous part, and the total amount owed to him is 12,400. He has not made any sales, has not received anything on behalf of the business, so all the 12,400 will be payable to him, and this amount will pay by Greaves to Hurst, and he has balance brought on the debit side 12,400. Debit side means this is amount receivable. Next, additional information. Following the closure of the joint venture, Greaves and Hurst have received more orders and are considering forming a partnership. Their venture was profitable plus they are receiving more orders, and now they are considering to form a partnership. Advise Greaves and Hurst whether or not they should form a partnership. Justify your answer by discussing advantages and disadvantages of forming a partnership. You will write some general advantages and disadvantages of the partnership. Plus, you can mention in your answer that they are receiving more orders, their joint venture was profitable, there were no disputes among the ventures, so they should enter into the joint venture. Some benefits are continuity. In case of joint venture, the business comes to an end, to disclosure after the completion of the venture. But in case of partnership, this is not the problem. The business will continue. Next is long-term relationship with the partners. Formalized agreement, everything will be written in the partnership agreement to avoid any disputes, and easier to raise finance. As compared to the sole trader, it is easy to raise finance in the partnership. Disadvantages: unlimited liability. As compared to the limited companies, they have unlimited liability. They have limited liability. Limited companies have limited liability, but the partnership have unlimited liability. This is the disadvantage. Decision making is more difficult as compared to sole trader. There is only one person who have all the authority, and he can take decisions easily. Partners bound by agreement. All the partners in the partnership are bound by this agreement, the partnership agreement. They have to follow that agreement. Partners jointly responsible for the debts. All the partners will be responsible for the debts of the partnership. No matter why the partners have these debts, maybe one of the partner have made some damages to some third party, but all the partners will be liable for that. And the last one mark will be for your decision, either they should enter into the partnership or not.